Let's go for some breaking news.
For me is this sentence. So what we're learning is that the commercial real estate, which for those of you who don't know, there's real estate for consumers, normal people, and then there's real estate for businesses, offices, extra space, warehouses, stuff like that. And just like people, if you want to get commercial real estate, you need to get some debt. You might even need to get some investors and some capital. And it's a very big market. It's arguably bigger than personal real estate for consumers. And during the COVID crisis, what ended up happening when we pushed for work from home, or this idea of remote work, we don't need an office, we can work on the computer. We didn't know it at the time back in 2020. But what we're learning now is that banks and businesses, pretty much everyone, has in some form this commercial real estate debt. You can see here in the sentence that right now for just banks in the US, we've got about 270 billion in commercial real estate debt. And it looks like, to make things worse, a lot of the bigger banks are limited or restricted in how much they can lend. But you see here, most of that debt is held by the banks that are struggling. These small banks, these regional, local banks, they are the ones who hold most of this commercial real estate debt. We can get into why that's a problem in more detail, but the summary is we're in an economic decline. We have lack of demand. Businesses are either already remote or they don't need the office because they can't afford it. And so this is some big news because this is a ticking time bomb. The reason why this is relevant is right now, this number is for only the debt that will expire this year, which means if you've been paying off, you've got to finish it off by this year. So that's 270 billion, almost like more than $250 billion that we're going to have to get through by the end of this year in order to prevent or avoid apocalypse. In similar news, we heard about Silicon Valley Bank. We've heard about First Republic Bank. We saw Credit Suisse. We now have Deutsche Bank that's also struggling. And here is another bank that is actually very well known for money markets. And it's Charles Schwab, which is a U.S. It acts as a bank, but its big business model is for money market accounts, which means if you've got $1,000, rather than putting it in a savings account or keeping it in a checking account, you can use a provider like Schwab, and they will take your money and invest in like CDs. They'll invest in treasury bills, basically very liquid assets. They invest in money markets. And what do you know? Similar to what we're seeing in Europe, similar to what we have already seen in the US, we're seeing the same signs of weakness in a very big banking player that is actively involved in money markets. So this is a really big deal. This is really important because what we're learning is that this isn't just contained to small and regional banks. What we're learning is that this problem that banks are facing, which I can get into a little later, it's affecting everyone. It's affecting the big boys, Charles Schwab. We've got Deutsche Bank. We've got Credit Suisse. And on top of that, we're also seeing governments start to uncover fraud. One of the biggest problems with low interest rates in the economy is it can grow corruption and grow laziness and grow too much risk. And so the third piece of news I wanted to share, which was from last week, is, we're seeing governments act and start to take action on banks that have historically been sketchy, have maybe, been providing the services to the wrong people. And so here on this news, you can see that in France, they've had 5 banks that they've raided for tax fraud. You've got Societe Generale, BNP Paribas, HSBC. I think there's another 2. Looks like I can't find it. But yeah, this is a big deal. What we're seeing here is we're seeing banks actively struggling, even the largest banks. We're seeing that there is a time bomb within the banking system because, this, I imagine, is only talking about the US commercial real estate debt. I don't even think they have data on the global debt for commercial real estate. So you've got banks struggling. You've got this big looming debt that we're worried that we can't pay. And then you've got governments actually taking action on a lot of banks that for, several years, sometimes a decade or more, have gone without consequences and without accountability. So we can get into a little bit of a deep dive on kind of why all of this is happening and what's actually going wrong. But these are the 3 core points that I wanted to share with you today. Jared, let me know if you want me to continue. I've also got some tweets that kind of go over some little data points and some news, but they're less important. So first, just to answer your question quickly, Brando, I don't think this is true for 100% of the debt, but commercial real estate is generally organized just like a mortgage. It's just more complicated. So, some of them might have the mortgage being paid off over time at a specific interest rate, and then maybe it's fully paid off at the end. Some of them might have a balloon mortgage where, they pay off the interest as a payment, and then they have to pay off the full amount or the full principal at the end. So there's different ways that it's probably organized. But the point is, it looks like there's $270 billion in the barrel to have to either be defaulted on, refinanced, or paid off by the end of the year, which I think we'll unpack more about who exactly owns that debt and for what. And I think that will be more telling in terms of when that might blow and how big the impacts are going to be. And kind of continuing on here, I want to show a few things before I get into concepts. But, the Federal Reserve is taking action to try to solve this problem. I'm sure you've seen a lot of crypto Twitter news all over the place of, money printer, QE is back, Bitcoin to 100K, blah, blah, blah. And that's not quite what's going on here. So, when we saw the Fed's balance sheet explode during the COVID crisis, that was caused by more than just the Fed's tools. That was also caused by the stimulus that was going through the U.S. government at that time, and the Fed supported that. That was pushing money directly from the U.S. government into the hands of consumers, into the hands of business through the PPP loan. So this was literal money being pushed into private markets and into consumer hands. This is completely different. What we're seeing right now with what the Fed has done, they have launched a new program, a new tool, shiny, new, and it's called the Bank Term Funding Program or the Bank Term Lending Program. Can't remember exactly. But what it essentially does is it temporarily switches the losses on a bank's balance sheet for bonds to the Fed. So if I owned $100 in bonds as a bank, and right now they're worth 80, well, I can say, and I can get a loan for the full $100, even though it's currently only worth $80. So essentially what the Fed is doing to try to solve this problem is they're soaking up the unrealized losses that are hidden in bank balance sheets so that we can wait. That's the current solution, is that we've got a 1-year loan the Fed is offering to banks in the hope that at the end of 1 year, things will be better, liquidity will be more available, and that these banks will not continue to struggle. And what you can see is everyone is in on this. Not only are US banks interested, but we're just seeing an increase in the amount of lending and the amount of swaps that the Federal Reserve is offering across the world. So we're seeing banks in Europe, we're seeing banks in Asia, banks in the Middle East. We're seeing banks all over the place that are trying to get access to US dollar liquidity and US dollar collateral. You can see here again, this is a separate avenue for banks to get cash. So there's the BTFP, which the Fed just launched this year in response to Silicon Valley Bank. And that's one way that the banks are getting access to liquidity. But there's a separate agency called the Federal Home Loan Banks. And what they are supposed to be doing is they're supposed to be offering banks access to loans and liquidity for the housing market. And what you normally see, you can see here on this graph that this guy shared, what normally happens in times of stress, in times of low liquidity, is that even though banks aren't using these loans for houses, they jump in here and they grab every piece of liquidity that they can because they want to survive. And just like in 2007 to 2008, you can see here, boom, huge spike in FHLB loans. You can see here again in 2020, boom, huge spike. And now look here. What we can see right now, if you cut this off up here, this is the real line. This is a real data point that says that we are seeing a massive spike in federal home loans. And what this is showing, there's also news and unconfirmed sources that are saying we've already got another $400 billion of loans being drawn from the FHLB. So you can see the scale here, right? This was all of 2008. This is the beginning of 2023, before the recession actually hits. So already what you can see is that banks are scared. They're scared because they're trying to scramble for liquidity as fast as they can in order to survive. Now, what I wanted to do really briefly is go over some notes here, just so that anyone who is unsure about how everything works in the banking system, I just wanted to give a brief overview. I'll make this quick. So what we know is that the Fed's balance sheet is increasing. The world is scrambling for US dollars and USD-backed collateral. And meanwhile, banks are bleeding deposits and they're desperate. They need liquidity. And then when you look at the bond markets, they're betting on a pause. They think the Fed is not only going to stop rate hikes, but the next time that we see them at the FOMC, the bond market is betting very heavily. We're going to be seeing rate cuts, which is that's a night and day pivot from the Fed. And here's what's essentially going on, guys. You've got demand and earnings going down. So people are consuming less, businesses are investing less, wages are growing less. At the same time, because of the interest rates rising, you've got a higher cost of capital, not only new capital, but existing capital, sometimes in the form of debt. And what does that mean? Well, that means banks are getting less lending because people are borrowing less. And then also, any assets now have a lower growth potential because the cost of that capital is higher. And so when you have demand falling and when you have the cost of capital rising, this is the exact definition of an economic contraction, because less demand means businesses are earning less. The capital is more expensive, which means businesses, it's harder for businesses and people to survive. And then finally, the less that you have lending, the less money is being created into the economy. A very important thing to understand about the world is we use a fractional banking system, which means if you deposit $1 into my bank, I can use that to lend out $10 or $15. And so what ends up happening, what we've learned from the last 4 decades of monetary policy, is that when interest rates are low, it can cause chaos for banks. And I wanted to go over specifically what we're facing right now. This is the unique situation of 2020 through 2023. We've never faced this before in the world. This is new economic information that we've learned. But we got hit with a twofold problem. One, the money printer from 2022 created massive bank deposits, more than usual. So banks who normally were sitting fine with their balance of good yielding assets and deposits, well, they got a massive wave of deposits that now need to be matched with an asset. If you'll remember, for banks, the accounting is flipped. If they get the deposit, that's actually a liability. They have to pay that back later. So what they have to do is anytime they get a deposit, they buy assets to match it. The problem was that we were in a low interest rate environment. So when we cut rates in 2022 and businesses and deposits were just flooding from the stimulus and the PPP loans, well, the banks got forced into a bad decision. Most banks were forced to purchase super low yielding assets that are very expensive. If you remember my talk about bonds, the lower the yield, the higher the price. So banks kind of got trapped. They got all these deposits and they had nothing else that they could do except for buy assets in a low interest rate environment. The second thing that happened is that we have seen one of the fastest, strongest Fed rate hikes in our modern era. There's this thing called a duration mismatch. And what that means is when you have a low yield environment and then you switch to a high yield environment with higher interest rates, banks start to lose money because their assets are producing a tiny, tiny yield. But the market value of those assets are tanking because when interest rates go up, bond values go down. So the speed at which the Fed started raising rates this time did not give the banks any chance to prepare. So to recap, the problem that we're facing today and the reason why we're seeing everything that we are seeing is because a massive inflow of deposits forced the banks to purchase low yielding assets when there were low interest rates. Then because the Fed rate hiked so quickly and so strong and so aggressively, what we ended up doing is we forced a duration mismatch on the banks. The banks were holding expensive low yield assets, and the higher the rates went and the faster the rates were increased, the lower the value of those bonds, and the opportunity cost of the low yields versus the new yields puts banks in a very tenuous position. So I hope that makes sense and that gives everyone a better understanding for why we're seeing what we're seeing here. The reason why not only US banks, but world banks are rushing to find liquidity. They're even going to the government. That's supposed to be a bad stigma. You're not supposed to go to the government for money. That looks bad. But banks don't care right now. Banks are showing us that they are preparing for something very big. They are making sure that their bank has more liquidity and can survive than the other banks. And that's why we see this big race for liquidity. I can keep going a little bit, JR, if you want, but I think that pretty much recaps. I just wanted to give everyone a good understanding for why we see this news. Why does it matter that there's $270 billion in commercial real estate debt expiring this year? Why does it matter that we have big kings like Charles Schwab that's also starting to show cracks in this high interest rate environment?
That to make a take profit too, it's because we did retested this previous and lowest level of this current daily, that has been at this value area low from 28,100. So when I'm looking at this, that has been very easy for me that to click and that to entry short very at the top of this candle. When I spotted the aggressivity from this long position, and also that the price pushed above and break short this small consolidation. We have a movement that has been brutal. And if you are looking at your contract, if you are looking at your contract, is that all of the way contract closing. So when this contract closed, you has been able to see long position started to getting out. After that, this movement has squeezed this short position. But you can also see some things that are very important is that short did started to exit. At the previously level from this 28,300, 28,400, starting to break above this VWAP, you has been able to see contract closing, and small opening contract, but nothing as that to make me trust that this trend will continue. Okay, because if here I would like that to see a big continuation above it, that just very big continuation from the long position coming inside while having more short getting squeezed and closing with much more contract, okay, opening than closing. So you can see the opening interest has been above the current level, that after we started to have contract close, okay, we have lost interest. We started to have lost interest. Eventually, you could say yes, but if this short had closed their contract, but we still receive this long position strength, I will be agree with you. But then my open interest need to be stronger, okay? Need to get more positive. Even if I have 30,000 short position that will close their position, but I would like that to see that, okay, we have continuation, we have strength, and then have 40, 50,000 increasing contract, opening contract, and then my open interest continuing to rise, okay? But just when I did so that we have this swing between the net short and the net long, but also the open interest, and as Bondo did say it, between volume, but I'm looking also at the sell trades dominance and buy trades dominance, okay? When I'm looking at this 1.2 billion, 1.3 billion, and then bam, we start to lose momentum. And for me, that's very easy, and I say it already. When we start to losing momentum as a top during a market auction, okay, that's very easy. You are able that to see on the top of this candle from this value area height that then price goes inside again, goes below again, and you did have start to have exhaustion, okay, with long position and also with buyers. So at this current moment, when you lose the momentum, for me is that very easy. I have to stay about my VWAP. I want that to see then continuation on my open interest. I want to have a big open interest increasing because I'm looking on this long position, and because when I spot directly from the Binance, BUSD and USDT, and also on the Coinbase, started to have volume on my CVD declining. Okay, so perpetual and future declining, while the price has been aggressively pushing to the upside, can't continue alone. Okay, you are cutting the juice. The price is not natural, it's not organic anymore. And if you doesn't put it fuel, the price will just retrace. Okay, very easy and simple. Looking at the CVD, negative, started to have a small change, but that is not a change. For me, that's not a change. Okay. So another point, when you are looking at all of this aggressive imbalance, okay, you are able that to see that is got exhaustion. Okay, they has been exhausted and aren't able that to send the price above, up. Look at this incredible imbalance. Okay, that's very aggressive. I did. Okay. When you are looking at this, okay, you are just able to spot your buyers and your sellers. When you want that to looking very aggressivity and to really have an understanding about what is currently happening, and I do think that I tell you, Bondo, that I've been using the developing months today and the developing months on my data and on my volume profile. Okay, I simply needed that to spot this consolidation. If you are looking at, I did have then my poke here, and I did have also my volume in my poke. Okay, I needed that to spot this consolidation and that to follow. Okay, that's what are serving the market profile. Okay, this is a market profile. That's my exo chart. I'm able to see everything inside the candle. Okay, and 1.1 million boom up, 7 million, 25, 2.5, sorry, 2.5 to 26 million. That's crazy a lot. 628 to 13 million, 4.5 million to 24 million. Bam, 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 bam. We follow. And even if we lose, we started to lose. But looking at, and remember what I said, you are still holding at the next candle and you are not closing it yet below. But then, spot between the dominance from long and short position, and go looking also at the spot for the market limit orders, Mr. Alex Bling Bling that are on the live stream right now, okay? Because you're on your market profile. So you are your volume that are making swing. You have totally changed from the imbalance power and dominance from the sellers long and short, and from perpetual futures, but also losing interest and declining interest strengths on the spot, okay? That's totally telling you, hey, I'm going to fuck your long right now, and if you are buying it, you will stay at this top. So that, you know, that's very easy. Another point, when you are spotting the monthly, okay, or the weekly at special instance, like I say, for me, I like that to spot the weekly the weekly on my exo chart, my volume profile and my delta for some special and pre-event. But for Monday, for the Friday, and has been in the past years, in the previous years, the New York session on Thursday, that has been one of the most fabulous. Okay, we pump and we dump it. We pump and we dump it. That's been a very good moment to learn easy. You long and you short. You long and you short. That was the very paradise scalp and that to spot the position easy. So when you have been able to see this, and even if you want that to looking at very fast your volume, okay, you can able that to see this change. Okay, you are seeing the change. But remember, and that's what I said before yesterday, I say put it the monthly and put it and you will open this video again that has been recorded and look at exactly this 28,700. Okay. So today, if you did research Confluence to take and to put aside Mr. Wallace that has been scared, fuck, you have been scared that to click with more size on this short. Why? We have this volume profile and we have this delta that I recorded on the video that I give here, a range and the range below, and that the price will just play ping pong, ping pong. Okay, and with at the same time the two maker feeds. Got my computer on. If anyone want, I can share my two feeds. Yes, of course, you will share it. Just 1 minute, I'm finishing it because you know they can have much more problem that to understand that you are understanding more faster, Mr. Astra Boy. Triple, he have know his name Astra Boy. Okay, all right. So let's continue. You has been able to see price try to consolidate. Has been a success, yes or no? No. Look at this volume. Look at this volume here. You can see my bars of the volume, what I did learn to yours for the previous materials on the Discord, and I made the video. Net long position, open interest, net short position, and you are following it all. So Mr. Alex, you did both your premium exo chart. You will kick your ass that you use it full pack. And that to make everything good. Because when I'm saying that it's different and that you have change, you still have change. But you have to know how to use this change. Alright, let's continue forward. This has been why we say we take profit. Okay? Boom, we get a rejection here, no more consolidation. And then say what? But you know what? We will gonna damp it more. And boom, from a 657 million from the delta that has been at 2%, we goes try to attract and to catch this negative follow. Okay, even that you see, yes, of course, they aren't been able. JR, we send and 1 and 2 candle. Okay, no, You sell above, you open the next candle above. You want to try to make a consolidation while you have this previous stacked and long and short stacked buyers and long position. But then look at this aggressive stacked on the 3 row that has break the price. Then this, that was demand turned it into this supply and resistance. So when you're opening this candle that they aren't able to break the price below, these are opening. You open the candle. That means next following candle you want to have your 2 candle consolidation. And that to maintain at the minimum, even if it's faking out, that to maintain this poke. Okay, but already you maintain this value area height of this previous candle that you are breaking above. You then try, okay, I have my 12 and my 13,000 that currently we are exchanging. We are trying to make a fair value, okay? And we will try to have on this low exchange that you can see from this volume profile, okay? You have no things. And look at the deadline, you have no things. We are looking at the developing months. When you come on this area that have no things, because we have been between 30 to 48 and between this 25 to this 16 for months, then you want that here is creating consolidation, is creating an exchange. Oh, I'm going to sell you 30,000 30,000 chupa. Wow! Allez, let's go. I'm talking about this and we are making another take profit here. That's short are printing family. Short are printing. Okay, just 1 minute. Oh. So where is this? Okay. Up, right. Okay, so up, back. What I wanted to say. So yeah, now we are able to. That's the same. Looking at that's the same frequency. Okay, you have your 1.1 million that are underwater here, and they are already scaring what is coming for you. You have this 6 million trying to turn into positive and reclaim the next candle above the value area. Okay, but if you are looking, yeah, here, up on top, where this been? No, not this one. 1 million, 3 point, here, okay. We have this 2.7, 2.6, but okay, battling and 3.4, okay? Price try to faking you out, to facing you, okay? We always know Alex, Iran, wow! Okay, strength is coming, I'm going to enter. I will take my long position, let's go for it. You're opening the candle and you have 1 and 2 candle following bar. Alex is underwater, okay? Right here, you have gray. Gray trying to find strength and confluence on the swing fibs level with the 88% and the 60 and the plus 66%. Okay? Boom, gray enter long, strength coming a little bit and then say, fuck you off. You doesn't wait a little bit more consolidation. Okay? So you have that to understand when you are spotting, okay, your long position or your short position, depending on the tendency, you have that to see change. If you are not waiting at these 2 candle rules, you have that to see a big change. And by big change, I'm saying that here, example gray, would like that have to see this 300 million, 600 million, and boom, 1 billion, 1 billion. All right. They start to have some kind of excitation because, you know, I'm seeing already, I'm seeing these trends and that's make me happy. We snipe it. Short are printing. Sandra is very happy, even if she are tired right now, she very happy. She are printing money. Short is heavy. Let's send it to 25, 23, and even 18. Let's liquidate Y, okay? So yeah, continuation. Look at this, okay? Even that you want that the price is breaking above, but look at this. You have acceleration on this downside. Okay, you have an acceleration. They are trying to break short level. And remember, Gray, and you will all, because the members that are not on that are on this live right now, and that are listening to me and that will not open the video that I made, that I created yesterday at 4 in the morning. If you do not remember this level and I say we break above, and then we looking at this, you remember? And that it's what currently happened and opened this daily, and where we are going to head right now. Okay? So, spike, 2 bars. Spike, 2 bars. Nothings. And closing currently this gap. Okay? That's, wow, that's beautiful. That trading is very, very so beautiful. You know, trading is so beautiful. You click prices, then you click prices, bam. That's just, you know, you even if you are going to sell some kind of shit drugs, even if you are going to sell your body on the street, you will never make so much money easier than on trading. That's so much easy. Okay? And I know Gray is logging right now, but Gray, do not log. If you log, going to liquidate your position. So yeah, you know, currently let me spot this. Bah! Look at this contract. Look at this contract. And boom. Value from this net long. Naked. They are nude. Wow. And you have a 1.5 billion that tried to nuke this price. Okay. Remember that we are right now just on this value area. Okay. Value area height here. 27,700. Normally we find reaction on this. Yeah, almost, huh? Right, almost. Look at this value area candle and look at this value area height candle. Look at these 2 repairs. Do not find excuse. Do not find an excuse. Okay? So, you have that to wait for its developing. Okay? And the gains that did took a long on this here between when you have no things. Okay? And that's just, and I'm going to tell you, because if you are scalping, example on this, I can understand you are scalping $100, or maybe, I don't even know what is the fees for $100 when you are opening a contract. How much is the fees? $1,000 or whatever. I should have triple is a good one for this. But if you are opening $1 million, I'm going to tell you, you are going to pay a lot of fees that to open your contract and that to get smoked at the end, because when you will just close for this and close the contract, you will lose money. Ethereum. Look at that. How they are nuking your boy. They are nuking your boy. All between, we are just succeed. Okay, the super troops. The just short. Low to go to the high to back to the low at the rejection, and between on every single of these fibs is where you are just looking at your absorption and you are swinging. Okay, triple, you already know it, you are good at it. So the double golden pocket, bam bam. Okay, right, and then that's just simply, okay, that's just simply, and you are looking at continuation, and you are looking at this continuation. And just, you will have to know that when you will break short, that's double golden on the downside, you will take this blue. And that's the same for this, for the above. Okay? If you are very, very extending, okay, from this height, this low, sorry, to, I don't want to say shit. Okay? For me, the low very start here, this range. And the height start here. Up and also up. Okay, so yeah, currently, you know, that you are shopping on fibs. If you are reclaiming, then same on the previous fib just before earlier, or if not, you just click them, and we are taking all. But what we want, these are simply scalping. These are what Zuzu and Triple are very good to scalp inside. Okay, that's instant. That's not yours. And looking at the others, that's very easy. You swing, okay, you swing, and you swing, okay, reverse and swing, okay, and then 28 poles. What I'm saying, 28 poles. What I'm saying, 28 points. Okay, so I start to want to click a little bit too strong. I have to control myself. We all have to control yourself. We want to dump this price impedance again. We want to dump it, but we are just following. And why? Because you are on 50%. Okay? Because you are on 50%. I have this absolute price as of now. Okay? I will not go on some things. Okay, you will have demand, and here you have this previous high. Okay, as you are in the middle of it, and also on 50% here, you can buy consolidation. Okay, by consolidation, and after sometimes that too have reclaim, retest, taking out short that are comfortable on this previous high. But that the price will retrace this previous here that we have sometime in previous fair value area. So simply be aware that you are on this 50% prices shopping, that you can have reclaim, or simply just we are driving and we are reclaiming. Okay? These are very, very important level. And if you are losing by 2 candle, 3 candle, that doesn't have strength to reclaim above this 88%, hey boy, you send. Okay? We send. And I will have my retracement, and then we buy and we full long. Right? Depending on what's happening until, okay? The government do not want to fuck me again on some timing. Right? So that's very important. And about the exo chart, that's I explained it once again on this video, on this live stream, and on the previous one, and on all materials video that I give.